Hey everyone. Most of you I know, so good to see you and thank you for joining us. Um, my name is Andrea Cancellare. My role at Vesta Settlements is business development. So I work very closely with agents and see how I can best support them, whether it be through events or education or just questions that they need during business hours, but also on weekends and evenings. So I'm kind of just want to be an extension of you and your team. Um, so please call me or text me anytime you need anything, and I'm always happy to help. And if I can't help, I will find someone that can. So Rob is the attorney that I work so closely with. He does all the settlements here at our Tyson's office. He's the managing attorney, and he's one of the most knowledgeable uh, attorneys that I know. So I really feel that he can help you and your clients and make you look great in front of them. So this is Rob Ulmer, and he will be teaching the mock settlement class today. And please feel free to ask questions if you need to. We want it to be as interactive as possible so you can get the most out of this. So anyway, that being said, here's Rob.
Hey guys, I'm Rob Ulmer, attorney with Vesta Settlements. We obviously want to elevate your client experience, and to the degree that you can assist with that, I'm going to go through a couple talking points to help you elevate the client experience at the closing table too. I'm going to go through about 5 points, and then we'll email out the talking points that I have. But then we'll also, toward the end, go over some document exhibits that you're going to see commonly at the closing table. So the first thing, obviously, on closing day, you're going to, obviously, on a property, want to do the final walkthrough. And for newer agents, you may not realize this unless you've read the contract very carefully, is that you have up to 7 days prior to the closing date to do your final walkthrough. So I always recommend that you do the final walkthrough the day before, if at all possible. I know sometimes it's impossible and not practical if there's a renter in there or other extenuating circumstances if you have out of town buyers just coming in. But to the degree possible, you have up to 7 days prior to the closing to do a final walkthrough. Make sure that all of your, if any home inspection items are done, if anything new came up that was not the same as when you saw it. I recommend like 1 or 2 days before. Any more than that, you'll want to do a quick same day, same day walkthrough, especially in the winter time. I had a situation, had a closing where there was a pipe burst, morning of closing in February. So that was part of Murphy's Law of closings, and it happened the day of closing. But the way that you could really enhance your experience is for your client is doing the final walkthrough the day before. That way, if there's anything there, it can be to the degree possible, you have at least a chance of getting it fixed, resolved, you know, by the closing day. Most common thing, I've seen people, oh, the dishwasher stopped working all of a sudden. Oh, well, if you had done it the day before or 2 days before, you could have gotten, a repair person there. The seller could have gotten a repair person there. Um, you know, things like that. So that's just one example. Um, and then another point I wanted to bring up is what to bring to closing. So buyers need to bring an unexpired, valid government-issued ID. Best case scenario for their cash to close, it's funny that clients are always like, oh, I want to get as much interest as I can, so I'm going to wire, same day. You want to sort of shy them away if they're going to wire funds. Funds are due at the table. We have to have, it's not, funds wired at the table. It is funds due at the table. So to set your, clients up for, a smooth settlement, I would highly recommend if they're going to wire funds to wire them the day before. So if they're doing a Monday closing, do it Friday. If it's a Friday closing, do it Thursday before close of business. Normally the wire cutoff is 4:30 p.m. So just have them wire the funds before 4:30 the day prior. For sellers, sellers also need to bring an unexpired valid ID. Um, and then what they need to have is wire instructions. And that can be for where they want their proceeds. If they're 99% of sellers, get proceeds, there are occasions where sellers have to bring money to the table, but then they could just bring a certified funds. But if they're getting funds back, recommend that if they have a checkbook, it's probably one of the few things they're going to use their checkbook, actual paper checks for, is bringing a check. Make sure that their updated address is on there. And then we obviously need the account and routing number on there. I kind of shy away from brokerage account wiring instructions. They're a bit more complicated. You could always ask your clients beforehand, if you have sellers, if you're on the listing side, say, hey, for your wire instructions, are you wiring to a checking account or a brokerage account? If it's a brokerage account, um, maybe give them a little nudge for a checking. They could always transfer it into their brokerage. But if really want their, especially if it's a trust and the trust account is in a brokerage account, they need separate wire instructions from their brokerage firm that they will need to have prior to coming to closing. So just print them out and bring them. These are separate instructions. And also for brokerage accounts, it does take an extra day. So if they are really, if they're the nervous sellers and they really want to see, the funds as soon as possible, it's faster. And the reason is because for brokerage accounts, it goes to a receiving bank and then it goes to their brokerage fund. So that's why it takes a little bit of extra time for that. So that's kind of what that expectation is. The other expectation on the receiving end for Virginia, we have to be on record before we can disperse. So it already is going to probably be next day before sellers can get their funds. So the other expectation to set up for your Virginia clients is that you're not going to get a check at the table. It is called a dry settlement state, meaning we have to have notification from the county that the deed is on record. And if there's a mortgage, if the buyer is borrowing funds, the deed and mortgage have to be on record. So you want to set your clients up to say, hey, probably going to be the next day. If they've sold property in Maryland or DC, they might be used to getting a check at the table, which can happen in other states like Maryland and DC. You can get checks can be printed at the table as long as we have the buyer funds already deposited. So that's the other expectation for at the closing table that you want to set your sellers up for is for Virginia, you're going to wait until you have to wait until it goes on record. Another point before we go over the exhibits is keys. So a lot of sellers, in the old days when everybody, closed together, it was a big deal to sort of pass the keys across the tables from the sellers to the buyers. Nowadays, we're doing mostly split settlements. So basically, the sellers come and the buyers might actually be signing at another location. So it does present some logistical challenges for title companies when you have a seller signing at one location and buyers signing another. The best case scenario for your sellers, especially if they are not signing together, which 99% of the time now they're not, is to either leave the keys in the lockbox, or I always tell them leave the keys in a top drawer closest to the refrigerator. So like, the utensils drawer, just put all the keys in there, have one key in the lockbox. Then when your buyers go through and do their final walkthrough, take that key to closing, they go home, they go back to the property, and then get the rest of the keys at that point. So, and that really, parking passes, fobs, I mean, people have come to, and even, paperwork related to warranties for appliances, just have them stacked like underneath in that same drawer. Sometimes people come to closing with all kinds of gigantic documents that are probably better off left at the property. So that is, and if the last resort, if the sellers, if the property is an hour away and the sellers have already come, we will, as a last resort, accept the keys, but it's always, best case scenario, leave the keys at the property with a way for the buyers to get in. And then what to expect at the closing table. So if you guys have done some buyer closings, you know that the stack is huge. So we have two types of buyer clients, the reader and the signer. So the reader is going to want to read every single page of every single document that could take, if you've seen the closing package, could take hours. So if you get a sense, if you notice that your client is, reading through the contract at the beginning of the transaction, taking the time to read, they have every right to do that. We could set them up for success if we know that they are interested in taking the time to read through everything. They can't change anything. Most of our clients, they accept what I describe the document as and they just sign it. But if they really want to read it, we are absolutely happy to send the documents in advance to the degree that we can. We can send our docs in advance. Normally, we'll get the loan package the day before. Usually, sometimes we do get it day of, so it is a little bit of a challenge. But if we know in advance that your client is going to read the documents, we can do our best to send. We can do our best to send the documents in advance. All right. So then, let me make sure I've touched on all the points here. Yeah, so that's basically, we can send the documents in advance. Same thing for the seller. I don't really mind if I get, a surprise reader on the seller side because the documents are much shorter. But still, if you get a sense that you're, as the listing agent, if you think that your seller is going to want to read through everything, that's even easier. We can send them all of the documents well in advance for them to review. And again, it's their right to do that. We just set it up because most of our clients do just, I'll give each document a summary of what it is, mostly a disclosure. Clients cannot edit it, they cannot change anything, so they're usually just fine with my little game day summary of the document. So, and the next thing is basically the closing process. So I have some exhibits, and I'll share the screen in just a second, and we'll kind of go over the common documents, including some of the documents from what's commonly found in a loan package. Again, I'm sort of teaching this class from the perspective of what the agent views and not what the buyer. I would give a different presentation to a buyer client or a seller client, but just so you're sort of aware and can, elevate your client experience with kind of common questions for the closing table that would assist us. Otherwise, we help them at the closing table with all of the documents, but to the degree that they might have something in advance and they think to ask you rather than us, it could elevate their experience with the more knowledge that you have. So once we're seated at the closing table, the very first thing we do is review the Alta settlement statement. It has all the debits and credit line items and shows the cash that is needed by the buyer at the table. We also have the seller side on there now. So that is actually, the Alta statement is actually the first document that I am going to share. So can you guys see this right now? Can
Yes,
everyone see this?
you're good.
All right. So we can see on the right-hand side the debits and credits. It's always going to be this. It's grouped the same way. You can see the little headings, the financial, the prorations adjustments, the loan charges, impounds, government recording charges. So the financials are always going to be the sale price of the property. If the, this might be something that you guys get asked. Oh, when do I get, when do I get my deposit back? Because they're thinking in terms of, especially if they've been thinking in terms of renting. Well, that's the first line item. They're getting that as a credit toward their purchase. So I've had someone ask me, oh, do I get a check for that $10,000? No, it's actually on the credit side and it sort of reduces your cash to close. So that might be a question that comes up. Then we have the loan amount that they're getting on the buyer side. Sometimes the lender will give them a credit, so that would be there. Any agent or lender credit is also going to be in the financial section. You'll see that in this closing, the buyer agent gave a credit of 1,000. If you can see that, 565 for the lender credit. Then the next section only occurs if there's going to always be property taxes unless it doesn't happen twice a year, and that is July 1st and January 1st. There's no prorations because if you're closing on either of those 2 days, that is the very beginning of the tax period. So that is the only day where you would not have a proration. But otherwise, we prorate the property taxes and the HOA to the day of settlement, because that's another question the buyers have is they say, oh, well, when I get my tax bill, do I, tell them how much, the seller owes me and do I have to reach back out to them? Nope, we do that at the closing table. So looks like the closing date here was April 3rd. So we basically prorated the property taxes because it was still before July, so the first tax period. This closing happened during the first tax period, so we prorated from January 1st to April 3rd. And they got a credit because the taxes for that period was going to be paid in June. And then the HOA and the association, sometimes there's more than one association, and that's very important too. You want to actually, that should not come up at the closing table. If there's two HOAs, that should be something that the listing agent discloses at the very beginning. But this is an instant where there are two HOAs. So it looks like they were both paid at the beginning of the year, at the beginning either of the month. So the first one was monthly, the second one was annually. Either way, the buyer is being debited for the per diem amount. Next section is, and this varies, but the lender has different charges that they charge. There's usually always either an application or processing fee, an underwriting fee. They're always going to get charged for a credit report. The lender is always going to want to know if their property is in a flood zone. I always get this question, oh, I'm on the 7th floor of a condo. Why do I need a flood certification? Well, how would you get to your condo if your building is underwater? I mean, you'd need a boat. So it's just regarding the property of accessing the property and the building itself. Unique to this loan, property data report, there's going to be things that, are unique to each loan that if the buyer has a question, they can ask their loan officer individually. You're always going to do prepaid interest unless it's unless you're closing on, like if someone closed September 1st. Actually, I take that back. If they're closing on September 30th, there would be no prepaid interest. But you're basically prepaying interest for the current month because your first payment is the first day of the following month. And not to get into the weeds here, but you're paying for the current month's interest, and then your first payment is paying for the month prior. you're not going to need to know that. But that is what that is. And if they have something, if they have a question about this portion of the settlement statement, you can refer them to us. That's fine, or the loan officer, because it gets a little bit complicated. Then, per the contract, government recording and transfer charges are divided between the buyer and seller per the contract. Sometimes your buyer or seller might say, well, why am I responsible for these charges and not those? It's because if you look at the proration paragraph of the NVAR contract, the seller is responsible for the grantor tax to the county and state, and then the buyer is responsible for the recordation taxes. So Virginia has a state and a county recordation tax for anything that gets recorded. So if there is a deed, obviously there's going to be a deed. So there's always going to be a state and a county deed tax. And then, because you'll see that on here, and then you'll see a county and state deed of trust. That is synonymous with mortgage. So deed of trust is a term of art, legal term for your mortgage. If there was a POA, if one of your clients was signing by POA, in Virginia, we have to submit the POA and the power of attorney affidavit. And so that's also recorded, and that would have been on here as a recording charge as well. So then we get into the title company charges. So we have here at Vesta, we use the top of the line computer system, Qualia, and it's secure. And we'll have all of your clients' documents in a secure place for as long as they would like to log in and view them. They could also download them to a secure cloud if they want. So we have an archive fee for our Qualia documents. The closing protection letter, the CPL premium lender to First American, that is a standard charged by every title company. It basically is insurance for the money that the lender is sending to us from them. So that means if something happens to the wire, that money is insured. So that's what that is. For delivery and wire fees, that's just general standard if we wire money back or receive a wire from the client. The other question that we get is about the two title insurance policies. And the buyer is required to purchase both. So the buyer purchases the lender's title insurance policy. That only covers the lender against anything that may not be present in the land records, and it only covers whatever remaining balance they have left. The owner's policy, which is at the very end here, so that is what is covering the buyer themselves. So that covers the buyer against any title defects, and it covers them for the standard. It covers them to the contract price. If they get enhanced, which most people do, because over time, it's assumed that your property is going to go up in price. So they will cover up to 50% equity over a certain period, depending on when the title defects is discovered. It will cover the equity up to 50% as well. And then going back, we have a very reasonable settlement fee that is lower than most title companies, is $545. And then this title commitment, basically when you send your contract to us, our title underwriters, which in this case we have a few, so this one was insured by First American, they commit to underwriting a title insurance by getting a preliminary title report. And then we have our reviewers review the title report that we get from King Street Abstractors. That is the actual document that we get from the land records. So that shows the whole history of title, all the deeds in, all the deeds out, all the mortgage in, all the mortgage out, and make sure that everything's in and everything's out. If there's any missing parties in the deed, checks the chain of title, make sure the chain of title is secure and there's no missing parties there. Um, and then on these are the miscellaneous delivery and wires. I'm going to go over and before I go over the seller side, I'm going to pause and ask you if there's any question, because this is probably the main part of the presentation. So I want to make sure everyone understands that. So before I go to the seller, I'll see if
Rob,
anyone has any questions.
Rob, there's a couple questions in the chat. Do you want me to read them to you, or can you see it?
Let me see. Yeah, do you want to read them for me? Because when I'm sharing my screen, I don't know if I can see them.
Okay, one says, is the Alta approved by the seller and the buyer prior to the closing?
They can definitely review it if they would like to see it beforehand. The seller reviews and approves the seller CD, and the buyer approves the buyer CD that they get from the lender.
Okay. And then the other question is, if the buyer and seller don't agree to close with Vesta, Vesta being the affiliated with EXP. I mean, that's okay. Oh, you go ahead and answer. Sorry.
Um, that is determined at the beginning of the contract. So we would only get closings that are where at least the buyer or the seller. In Virginia, split closings are allowed. So your buyer can still close with us. The seller can close with another title company as long as there's an attorney affiliated with that title company per the new guidelines by the state of Virginia. Vice versa is true. If you have a listing and your sellers want to close with us, we have attorneys here, so we can close a seller side only. So yeah. Um, are there any other questions on that? Oh wait, you know what? I can see. Okay, cool. I actually just pulled up. I'm Gen X, so I'm partially literate in computers, so figuring this out. Okay, cool. All right. You can continue putting questions in there if you like. Does anyone have any questions on the buyer side? The only thing that's left in the miscellaneous for the buyer is if there's an HOA, move-in fees, account transfer fees. If there's a survey for the property, like a land survey that shows you a map of the property, that's what that 350 is. Um, and then your homeowner's insurance premium. You're paying that on the settlement statement for the first year. Buyers get that confused, this line item with their escrow. So their escrow is being built up for uh, year two. So this is an account that is over and above the principal and interest that we'll look at. That's another exhibit that I have, is what's called the first payment letter. I'll show you more in detail what the impound is, but that is saving up for homeowners insurance and property taxes for the next time they're due. The homeowners insurance pays for year one. All right. So then jumping back up to the seller side, obviously the sale price of the property is the same. And then the prorations are just go in the opposite direction. Depends on if the seller paid them up front or if the buyer is going to pay them later. They're responsible per the contract, per the NVAR contract. Sellers are responsible for the grantor's tax to the county and state. It's like 0.1% of the contract price. And then for Northern Virginia counties, so for those of you that close in properties, I think from Prince William south, there is no congestion relief and regional WMATA capital fee. That's basically paying for the Silver Line and Route 66. So Northern Virginia counties pay those two fees. So that's why you see these on your Northern Virginia closings, but not, if they're in like Fredericksburg or any further south than that. Commission, and now this is going to change. I should update this document because this was pre-July, so that was when the commission was paid by the seller. Once we start doing closings where I see the commission done differently, I'll create another exhibit for future. But just be aware that it's not going to always be on the seller side now for the commissions. All right. And then the seller does also pay a delivery and wire for their proceeds. The document prep, Virginia rules say that deeds have to be prepared by lawyers and lawyers cannot, they have to be separate. They cannot work under a title company. So even though Barrett and Everhart and Vesta are related, Barrett and Everhart does our deeds. It's basically me. I'm a lawyer at Barrett and Everhart. So that's, and you'll see that on every Virginia closing. Deed preparation is always separated out from the title company, unless it's on the seller side and they're actually doing it with the law firm. So that's what that is. This hazard risk insurance premium is really only going to apply in cases where an executor of an estate is selling. If you sell a property within a year of someone being deceased and it's the executor, the title insurer is going to require a hazard risk premium. That's what that is. It's not going to be, that's actually rare. These are all the HOA financial updates. There was, I guess they were still owed March and April of their HOA. And then there was some reimbursements, and their settlement fee is also $545. So these are charges to the seller. So basically, this is the settlement statement, basically. All right. So I'm looking at the questions. If anyone wants to unmute and ask a question live before I go to the next exhibit, I'm happy to do it. I'll give you a couple seconds.
Hi there. I have a question.
Yeah.
I'm sorry. So you mentioned the CPL, the closing protection letter, to protect some of the wiring, not exactly fraud, but if the wiring goes haywire. Can you explain that once again or just a little better so I can process it?
Yeah, so that is only available to the lender. So in the old days, I'll answer it with a little anecdote. In the old days, when there were escrow agents holding the money, there were some that were not very honest. And that ensures in the case where there is a wire problem. This does not cover the buyer or the seller. This covers the lender only, and the buyer is required to pay for it. So it protects the lender only in the case where there is a wire issue, or if the settlement agent, if I take that money, if I take the loan amount, $452,000, and get on a plane and go to the Bahamas, never to be heard from again. All right.
Noted. Thank you very much.
Yeah, absolutely. All right. Great. Actually, that's a great question. Anybody else? All right. So this is a standard closing disclosure from the buyer. Somebody had asked, do they review and approve? Yes. The buyers must review the 3-day rule. This closing disclosure is basically contains all the same information, but in a different format that the Alta did. So the Alta and the closing disclosure, the CD, buyer's closing disclosure, contains basically all the same information. The cover of the closing disclosure for the buyer has the loan amount, interest rate, principal and interest. So that's a little bit more than the Alta, but it has the same and then more than the Alta that the buyer looks at and must approve. That's the most common. I've seen closings delayed because the buyer has forgotten to click approve on the buyer closing disclosure to get it back to the lender in time. I've seen that occasionally. So you want to make sure your buyer, hey, did you get your CD? Did you approve it? Did the lender say it's okay? Did they receive it back? It's usually in their email. It might have gone to junk mail, but this is basically the buyer CD, and then the seller gets their version. So this is the seller. They just want to look at what they get. So in this one, due to seller is 531,172. When I'm going it over with the seller, usually what I'll just say is, hey, this document contains all the same information. Do you want to match your cash back to you, 531,172.19? That should match the cash back to you on our Alta. So that kind of circling back and answering that question on do they approve it? Yes, by way of these closing disclosures prior to meeting me at the table. So I want to tie something else together from the settlement statement, and that was the escrows. So they're building up the escrow, but essentially buyers want to know, hey, how much am I paying per month, and when is it due? So total monthly payment beginning. Remember this closed on April 3rd. May skipped June 1. So just think of it that way. So they closed on April 3rd and their first payment was due on June 1. So this is the principal and interest portion is the top line. Second one is the escrow for the taxes. Third one is escrow for the homeowner's insurance. Last line, total monthly payment, $36.93.75 due on June 1. That's kind of what I tell people. They build that up so that they have an escrow amount that is sort of a bank account for them. It's a little bit over than what they owe, so that when they sell or refinance the property, whatever is in that escrow account, they will get back. So I have to make this smaller because it's not letting me. Okay, there we go. All right. So this is one of the recording documents. This is the deed. So when we're going over the deed, we have the buyers check to make sure their spelling of their names are correct. They always want to look at the assessed value and they're like, oh my gosh, that's not how much I'm paying. I'm paying, 565. You'll see that in the consideration. Virginia requires that we put the assessed value on there because that's what they use. That's how they figure out the recordation and the grantor's tax. So we have to put the assessed value. That's a required amount. We put the consideration at the top. This $10 is a term of art. I could go into the history of why that's there. In the old days, people wanted to keep secret how much they sold their property for. Now it's not really a secret, but the writings of the Virginia deeds have remained the same. We've got the legal description. And then your buyers may say, well, how come I didn't sign the deed? Only the sellers sign the deed by mere acceptance is all that is needed. So you're only ever going to have sellers signing the deed. We will have the buyers look at it to make sure we spell their name correctly. We also want to make sure that the way their name appears on the deed and the mortgage have to be identical. So if they gave their name to the lender without their middle initial, and then at the table, all of a sudden they want their middle initial, it's going to be tough. We really can't do that. It's better to just leave it as it is, how it appears on the in the loan documents. We can do it, but it would require us to go back to the lender and redraft all the documents, and then they would delay their closing. So that's the other thing we look at on the deed is to make sure their name matches. And we're going to go to the next one. We're going to do the promissory note, and then we'll do the mortgage. So we're doing okay on time, I think. We only have a couple more documents left. So this is the promissory note. This is their promise to pay the lender $452,000 to Atlantic Coast. You'll see the interest rate there. You'll see the first payment is June 1. Most residential promissory notes, they're going to have a right to prepay without any penalty. So in a higher interest rate environment, if they have extra cash to put down to the principal, they can prepay without any kind of penalty. It also, the promissory note also shows that they have 15 calendar days to pay the mortgage, and then it's a 5% late fee. And then the rest of it is, if you can probably remember me saying, if you don't pay, you don't stay. All right. So we see on the, so we see here, and then this next document is what gets recorded. So this is the deed of trust. This is a long document. This is usually what borrowers get a little freaked out about. They want to read it. If they want to read it, that's fine. We could give it to them in advance. But there's basically 18 pages, 28 covenants under the promissory note. This is it could come with riders too. So the main, you'll see 28 promises that they owe the lender. Sometimes they'll want me to go through each promise with them. I don't mind doing that. It's where they try to read and understand all this legal document. If they want to do that, if you get a sense for that beforehand, we will, be happy to send something beforehand. So that is that. All right, I'm looking at the questions. So because a lot of these documents, I will find a sample blank deed of trust to send to you guys. I'm showing these on the screens. I want to make sure some of there's some privacy issues with sending these. I did redact the names, but I'm a little hesitant to send these out. But I will see what I can send out in terms of samples that will help your client. What I would say is in terms of samples, the best way is if your client, is nervous and wants documents, that is where they should reach out to their lender when the documents are drafted to ask them in advance so that they can review their own documents. So that's where I would say, hey, a couple days out of closing, just have them contact their loan officer. They will get they can get the entire loan package from them. These are just high level things that are common in a lot of the loan packages. So this says escrow account disclosure statement. So I want to tie this back to the settlement statement. This shows you the amount over and above the principal interest that they're pulling for taxes and insurance. They might say, well, why are they pulling so much in the very beginning? They always want a cushion in case property taxes go up. There's a special tax assessment. Your homeowner's insurance drastically goes up. They want to have amount to cover that. So the cushion selected by the servicer here was $1297.08. They collected that a lot at closing, and then the first payment, which is a month and a half later, 2 months later, they're collecting and building up, and you can see the balance of the escrow here. It goes down anytime a payment is made, and then it goes back up, and then it goes down when the second payment is made. So they just want to have enough for they want to have enough in case there's a drastic increase. If you have an event where you made a claim on your homeowner's insurance and then the premium is a lot higher, they want to make sure that they're not, shocking you with, a high increase on that escrow. For sellers, this is the owner affidavit for the title insurance policy. We check title, obviously. There are some things that may not be on title, such as a bankruptcy, an unrecorded judgment or lien, if they convey the property to another party. They're basically swearing and affirming that none of these took place. So if it is found out that they did, this is under oath basically because I'm notarizing it. We can go back and they're responsible for anything that's on
Hey
here.
Rob, are you supposed to be sharing your screen?
What's that?
Were you supposed to be sharing your screen for this affidavit?
Yeah. Is it not coming up?
No, it just went down about like a minute ago. So you were showing everything else before that.
Huh. All right. Can you see it now?
I can see the screen.
Oh, then I don't know.
Okay.
Commonwealth of Virginia.
I can see it too.
I can see it too.
So the last document that we're going to go over, and good because we're almost to time, and I'll take some questions. This says incomplete settlement agreement at the top. All of these things that are checked off have to be done before settlement is considered complete. And it makes sense. And once all of these things that are checked off are done, settlement is complete. So basically, makes sense. We got to have the seller sign. They have to sign their closing disclosure. The buyers have to sign their documents. They obviously have to bring their money. The lender obviously has to send their funds. Sometimes the lender wants to look at the buyer signed docs before they authorize disbursement. So in that case, I will scan everything in, send it to the lender. They will check it out and give us the go ahead. The last thing we do for the protection of the buyer is it's sort of an inside baseball term, but title bring down just basically means that we are checking title one more time to make sure that nothing was recorded between the last time that we checked title and the like the day that we go on title. So it's basically like we're looking both ways before we cross the street to make sure that nothing else came through. Once we do the title bring down, which is basically we call our abstractor to say, hey, can you check title, make sure nothing was recorded now. Then we immediately click go on all the recording documents. So in this case, it was the deed and the mortgage. So those two things we hit, we e-record. And then settlement is basically complete. But we don't do disbursements until we hear back from either Fairfax, Arlington, Loudoun County to say, hey, your documents are on record. So then settlement is complete, and then we will push the button on the wires. Your seller is going to receive their wire. Any refund your buyer might get, if they sent too much money, they would get that. And then settlement is complete. And your buyers have constructive title from the day of settlement, but you know, everything is cleared in terms of for closing. So does anyone, I know that was long, I'm sorry. Does anyone have any questions? I can go back to prior docs. Does anyone have any questions on anything that I went over? Hopefully this sort of prepares you. And if your clients have questions and they're like, oh, I remember Rob talked about this in his mock settlement, but you don't remember exactly, you can just reach out to me or Andrea. All right. Well, thank you for inviting me to be a part of this. And, you know, I'm happy to, you know, help you guys out with anything else. If your buyers have any other questions about anything else that we didn't even go over, if there's something else, either, you know, me or Andrea can help you with that too.
Perfect.
And I look forward to seeing you.
I do have a polite question. Is there, I know this is probably going to sound silly right now. I know you're going to send us most of these documents, but is there a way for us to kind of review these documents, like I guess in just generic form somewhere else, so we can kind of be a little bit more versed on them, you know, before we get to settlement? Because I've done closings, but most of mine have been in partnership with another agent. So I was never really the one that kind of looked at this type of stuff. So
let me see what I can do about getting blank forms of these. I just want to make sure there's no personal data that I'm that I'm sending out to people.
Absolutely.
But yeah, so I know that I know that we have a sample promissory note and deed of trust that the law firm does.
Gotcha.
But let me just go through these one more time and make sure they're redacted enough so I can send them to you guys, and I'll do that.
Absolutely. Okay, thank you so much.
All
I
right.
really
Yeah,
appreciate you. This was great.
absolutely.
Thank you.
All right.